Hello, everybody. How are you? My name is Amgad Atiyah. I'm the director for Tradeview, MENA. I come to you from New York. Was there anybody here last May when we had the show? Anybody here from last May? Anybody here? No, this is your first time. Okay. And I'll tell you why I asked this question in a minute. So we're going to talk about gold. I guess, anybody trading gold here? Okay, all right, beautiful. I guess everybody's trading gold here. You know, guys, that the daily range for gold has never been higher in all history. So we're managing close to $100 of daily range every day. Sometimes you get $300 when you go up 100 something and you come down and you go up again. So I guess this is why everybody's trading gold. So let me just give you a quick overview of who we are. Tradeview is US-based. We started in New York City. We are regulated in multiple jurisdictions, including ESCA over here. We're getting our license, Category 5 license in ESCA within the next month or so. But we've been in business for over 20 years, regulated in Europe, in multiple places, in Cayman Island. So whatever you need in terms of regulatory environment, we can provide for you. Also, Tradeview is also the sponsors for the rugby team, Leicester City. Anybody knows rugby? I'm sure. Okay, you see that? There are some people who know rugby, so we are sponsoring the rugby team of Leicester City in the UK in the Premier League ship. And we are one-stop shop. If you're looking for a broker that provide unexchanged US stocks, we can do this. We provide unexchanged stuff. We do not provide CFD stocks. We provide real stocks where you can collect dividend and you can have a very reasonable commission-based and spread-based. Let me just go quickly about gold, because I know we have a limited period of time and I want to make sure we cover a lot of stuff. So last year I stood here on this stage. Gold was at $1,700. And this is why I asked if anybody was here or not. So people were asking me, where are we going to go? Are we going up? Are we coming down? And the question at that time was, will gold hit $2,000? Lo and behold, a year later, we crossed the $3,500. So gold has gone up significantly within a year. And this is why a lot of people are trading gold. So, we've seen sizable decline in stock market. We have seen a lot of volatility basically in the global market. And the main thing, as everybody knows, is Trump tariff and all the stuff. So we've seen like this big decline. Gold has gone up this year alone 30%. This is pretty big when you look at all the other major indices that have gone down 20% to 25%, the NASDAQ, the S&P. So this is why I guess a lot of people like to trade gold. If you look at the chart, you notice that within a very short period of time, we went from, $2,500 to almost $3,500, $1,000 in a very short period of time. This is primarily from, since Trump was announced president to all the upheaval that we have seen in the last couple of months. And in the same time, you look at the chart of the NASDAQ, you'll see a huge decline at the same time in the NASDAQ. Now we're coming up again because the tariff shock is almost over and the stock market is starting to come up again. But when you look at the previous chart and this chart, you see the big discrepancy between gold and the US indices. The same thing when you look at the chart for the S&P 500. Also, we have seen a big decline while the gold has been coming up. So why does gold continue, to rise consistently? As you all know, we have a lot of geopolitical risks, a lot of issues, Ukraine, Russia, Gaza, Israel, we had recently, India, Pakistan. So you have all these geopolitical risks that have been taking place. You also have uncontrollable inflation after COVID. During COVID, government had to spend a lot of money to stimulate the economy. Where, when you have so much money supply, but you don't have enough goods on the other side, what happens is inflation will rise. So as inflation continues to rise, what happens is gold is going up. Why? Because that's the proper hedge when you have such a high inflation. Also, as you know, President Trump's tariff has even added more to the uncertainty. We have problems with China. We have problems in other locations where Trump tariff is threatening to cause upheaval in the global market. So this all has helped, raise the gold prices consistently. As we know, central bank buying. When the U.S. and Trump started to impose these tariff barriers, other countries, China, India, and other countries, they decided to buy gold to diversify away from the U.S. dollar. The reason the U.S. is so powerful is not because of military power. It's because of the U.S. dollar. This is something that you guys really need to understand. It's not about how much military power they have. It's about the U.S. dollar as a reserve currency. So the U.S. can print as many dollars as they want, and people are buying it. And this is the real power of the United States. So when they weaponize this by imposing sanctions on Russia and other countries, people kind of got scared. Other countries got scared. They said, we don't want to be under the control of the U.S. So what do? Let's diversify away from the dollar. Let's keep our reserve in other currencies or in other commodities, and gold, of course, and Bitcoin as well, were one of the two main things that were being used to this. So I guess the question in everybody's mind, where do we go from here? Okay, we have seen the last couple of I would say a couple of weeks, gold coming down almost $200. Why? Because we have a little bit of reduction in the volatility. We have a little bit of reduction in uncertainty. So, we have two scenarios. Gold can continue to go up. There's a lot of reason for it to go up. Or it can start to come down a bit more, and basically remain in a tight range, which I think is what's going to happen. But let's just go through the two scenarios. So, the bullish scenario, a lot of people would love for gold to continue to go up. But why would it continue to go up? Let's say the conflict in Ukraine was not resolved between Russia and Ukraine. Let's say the Trump tariff with China didn't work out, and we started to go back to 140%, 145% tariff on China, and then a counter tariff of 125%. If this continues to happen, if we start to see this global tension, gold prices are still continue to rise. The other thing is inflation. So if we see inflation going up, okay, again in the U.S. and primarily, you will start to see gold prices up. So when you look at the major banks, Goldman Sachs, J.P. Morgan, Bank of America, they are all boasting that the fact gold will continue to rise. Goldman Sachs is looking for 3,700. And maybe 4,500, in really the worst case scenario. We have J.P. Morgan saying it could reach 3,600 or maybe 4,000 by next year. You have Bank of America also saying 3,500, which we already did. So there's a lot of stuff that could continue to push gold prices higher. So, what is the other scenario? Do we have a bearish scenario where we see gold coming down? I think, in my opinion, maybe the bearish scenario is more the likely scenario. So let's say Trump is really banking on making trade deals. He wants to make a trade deal with China, trade deal with the EU, trade deal with UK. We already have seen him resolve the issue with the UK, and this weekend we have seen him also reach almost a preliminary agreement with China. So I think if we continue to see this type of trade deals, if we continue to see these tariffs coming down, if we continue to see inflation in the U.S., yesterday the CPI inflation in the U.S. came below expected. So what did we see? We started to see gold coming down. We started to see stock market going up. So this is what we call risk on, risk off trading strategy. So when you have a risk on day, you'll start to see prices of gold come down, prices of the yen, prices of the dollar, Swiss franc. These are all the safe haven in the market. In a risk on day, you will start to see these come down. You'll start to see Bitcoin. You'll start to see US stock market going up. So you guys need to understand, when you have a risk on day, you're going to start to see certain things go in correlation together up. If you have a risk-off day, you start to see things coming down in correlation. So you got to understand the relationship, not just if you're trading gold. Gold doesn't move by itself. Gold has to move against the dollar, number one, and it also moves against the U.S. stock market. So you've got to look at all these things together. I'll answer the question, but let me just finish up the presentation and I'll do so. So central bank policy shift. So we expect, banks to maybe decide to not buy as much gold. Things will start to come down. Economic resilience in the U.S. We're starting to see the U.S. economy showing that it's not slowing down as people expected. Maybe we're not going to have a recession like some people expected. And yes, the Federal Reserve is not cutting interest rate, but at some point they will cut. We started to see market volatility come down. And these are all the things that I think will contribute to a stable gold price. I don't think gold is going to crash. I don't think we're going back to $2,500 again. But I don't think we're going to see 4,000 this year, for example. I think things will start to stabilize around the $3,000 mark. And we're going to start to see narrowing of the daily ranges. And instead of having $100 to $200 a day, you might see $20 to $50 a day in terms of range. So I just want to thank you real quick. After this presentation, we are going at booth 22. We're going to raffle some really interesting prizes. So please make sure you go to booth 22, Tradeview, after this to join us in the raffle. So I still have 3 minutes, which I plan to have some questions from you guys, because I like these lectures to be interactive. I've been doing this for a good part of 20 years, and it's very important to hear what the traders want to know, and we would be happy to answer your questions. I know the gentleman here had a question.
You said Bitcoin correlate with gold, but when Bitcoin going up, gold usually going down. And now until end of the year, we're expecting bull run, so Bitcoin will go fully up.
At some point, yeah, so he was asking about correlation between Bitcoin and gold, okay? Bitcoin, for some time, was a risky asset, and still a risky asset, but it serves as an alternative reserve to the traditional currencies like the US dollar or gold. So as we see the decoupling now, you'll start to see Bitcoin, as you said, rising up a little bit more with the stock market as a risky asset. But for some time, especially during the first few weeks or stuff from Trump's administration, we've started to see a little bit of correlation. So go ahead. Yeah. Oh, you didn't have a question? Okay. Anybody else have a question, guys? Going once. Okay. The gentleman in the back. Okay, so he's asking about China and the United States. So how could they survive a trade war? Trade war is not in anybody's favor. It's not in China's favor. It's not in the U.S. favor. So I think, personally speaking, and as we have seen this weekend, we are going to see a resolution between China and the U.S. where both countries will come out with something. Nobody's going to get everything. Russia and China is not going to get everything that they want. The U.S. is not going to get everything that they want. But trade war will be destructive to both economies. And I think China realized this. And what Trump wants to do, being from the U.S., I speak from what I see every day. We want to be able to produce our critical supplies, okay? China can continue to grow, but the U.S., and not just the U.S., but the global economy need to be diversified. We can't continue to depend on China in getting our steel, aluminum, computers. We need to diversify. So I think what Trump is doing now is resetting the global economy. This way, not just for the U.S., but also for Europe and also for here. You don't want China just to be the manufacturer of cars. We need to do our own cars. Here they have to build their own cars. So I think things will resolve. Things will be good. Just give it a little bit of time. So I think I'm almost out of time. Do I have one more question? So one more question and then I will leave. Go ahead.
Picture of DXY for the 2025 with the tariff or with
I'm sorry, I didn't hear you. Go ahead.
share for
DX5?
DXY, US dollar index.
Oh, okay. So the dollar, he's asking about the price of the dollar, the dollar index. So this is really dependent on what the Fed will do. So far, the Fed has not really cut interest rate. So the dollar remained relatively strong compared to other currencies. You know, we've seen the ECB and Bank of England cut rates while the US dollar hasn't, while the Fed Reserve did not cut rates. So I expect the Fed Reserve to start to cut rates towards the fall of this year. So you're going to start to see the dollar index coming down, maybe fall. So October, November, we will start to see the real interest rate cuts in the US. Thank you guys for your time. I appreciate it. Make sure you come and visit us. We have a lot of stuff to give out, okay?
What will be the price of the gold in December?
I'm not a gambler, so I can't really tell you what the price of gold, but I think it's going to be around the 3,000 mark. I don't think we're going to go too high up again. Maybe 3,000, 3,100 at the most. Thank you again for your time. I appreciate it, guys.